The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We pick things up in Tuesday trading with markets in positive territory. We have a VIX right now sitting at about 40. So, yes, the market clawing back some of the losses yesterday. A remarkable day in terms of the acceleration up. We give it back, but this morning we are pushing the levels that you saw yesterday on the news that there was a 90-day pause. Turned out to be fake news, but nonetheless, you have the NASDAQ 100 as I come to you, up by 441 points. We just got above 18,000 again, and you had a run up yesterday. 18,361 was the spike high. So you're still talking about 2% even above where we are right now. But man, you talk about a run, because we pulled back right after that. Mr. Basil Chapman, you had some volatility yesterday, man. You talk about it. As of 1040, we're about 850 points above where we were in the NASDAQ 100. We chopped around at that level on a few occasions. You accelerated higher, and in the pre-market, we are trading higher with a little bit of a relief rally. From this point, no huge shift in negotiations on a fundamental basis that would drive it higher, but nonetheless, check out the S&Ps as we're climbing to the levels that we saw yesterday as well. We made it to 5250 early this morning. We're trading right now at 5230. The one thing I will say is 30, 40 points on these charts right now looks like nothing. And it's rightfully so nothing because of the volatility we're getting right now. We were just trading at 52.48 at after 8 a.m. and we went down 40 points almost to 52.11, and we've bounced in the last 28 minutes about 20 points to the upside. So we're going to see continued volatility, especially when you have a VIX sitting at 40.43. We're coming right back into the level that we saw on those market spikes higher. Dow up by 1,100 points. Similar action, clawing back a lot of the acceleration that we got yesterday. The Dow spiked to 39,427. And you got to a high this morning of almost 30 points away from there, 39,392. We take a look on a daily basis. Let's talk a little bit of price and volume, okay? This market, S&Ps, we barely edged out the volume that we had on Friday. That's an encouraging move for you bulls out there. 2 huge days, pretty close in volume, but you did do it. You trade lower. We actually finished above the lows of Friday yesterday in the S&Ps. We're climbing higher this morning. Yesterday, 3.514 million contracts as opposed to 3.453. So you're talking about a difference of about 50,000 contracts in the context of 3.5 million. 2 mammoth days of volume, but nonetheless, S&P is a little bit higher volume. NASDAQ 100, we barely missed the volume number. 1.125 versus 1.174. We put things on a 15-minute, and these markets pushing past the 382 and climbing towards the 50% retracement. And this is just of the pullback from Wednesday. We're going short term here. We're not talking about a retracement of the larger move. Okay, you take a look at the NASDAQ 100. So as we just said, we're coming up to the 382. You take a look at the larger move in terms of where we were February 18th. Now that's not the spike high, but it's pretty close. Okay. Let's take that off for some clarity. So what I wanted to show here, we're getting a nice confluence area, okay? If you're looking for a bounce, you're looking for an area. Confluence is 2 different Fibonacci retracement zones from 2 different trends that aligned. This is a perfect area of the 382 to the 618. Put it on your charts, folks. That area is at about 18,700 in the NASDAQ 100. So you can see the type of volatility we're getting, right? The 18,700 range, folks, is just a 382 bounce from where we started on February 18th. You have to chuckle. I mean, the moves that are going on. But nonetheless, right? Check out how they literally align to the tick. Now, you go over to the S&Ps. We already talked about the short term. Fibonacci number. We're coming past the 382. You do the same thing with the S&Ps. And you can see a range on the S&Ps that gets created from an area of about 53.56 is your 382 bounce from where we were February 18th, and your area of the 618 of the shorter term, 54.14. Okay, so again, if you're looking for ranges, 53.50 is going to be your 382 there. Nonetheless, we're going to have some volatility coming at you. All right, Bitcoin. We're up by about $2,000, 80,040. I'm going to pull up a chart later in the program. Bitcoin, it's trading hand in hand with growth stocks and the NASDAQ 100, or I think it's the Magnificent Seven. Huge correlation. That's how it's been, and that's probably how it's going to be. Gold, continued volatility. I tell you what, gold trading up $54 in the session, but let's jump to yields real quick. Now, about a half hour ago when I was writing the newsletter, Market Insights, we had the 10-year about 4.22. I think we're sitting right there, 4.23, so continuing to rise. Critical area in terms of where you are on the 10-year right now. I'm going to back it up to a daily. This area that we're at, which is at about 111.15, we'll call it, that's an area that you topped out back in December. Okay. And then you get to the area in March. And now we've accelerated through there, and that area that had been resistance, okay, could turn into support here. But boy, you talk about a move. 4.23%. The yield on the 10-year, lower price, higher yield coming at you. And the dollar pulling back a bit. So we have a lot of action in terms of, equities, yields, dollar. At the same time that we have yields rising, you have hit a point, and you see how that point is the same on the dollar, right? You have yields pulling back to the area you chopped around in. We have the dollar pulling back to that area. But watch both of those areas on your charts, because yes, you could consolidate much in the same way that you did from February until March. That was a full month of consolidation before you broke higher. But that's a decisive area. You break higher, you break lower. That's a technical area that you want to keep on your charts, and it correlates exactly what's happening to the dollar as well. Now, what I will say is that the dollar's pulled back a little bit from that area versus we have not seen, okay, any bounce in price in terms of any pullback in yield. We got a little bit dollar weakness. Dollar was at about 103.50, which is kind of its chop around area. Okay, that 103.50 where you were making lows for the better part of March. We've pulled back a bit. Yield's not doing it so far. All right, we'll take a look at some equities, man. I was looking at some of the Magnificent Seven, going a little bit longer term picture, and we're at some nice critical areas if you're looking for a bounce. Doesn't mean the pain's going to end, but Amazon, we're going to be up by about $8 this morning, and you see the area, right? Chopped around there for a year. That area at about 175. That's right where we just traded to. Amazon shares, as I said, up about $8 this morning. A lot of these areas. I put this out. Check it out, right? Microsoft. You talk about a nice technical area. Trading right back to where you were in 2021 as well. Stay tuned, folks. We'll take a look at some other equities. We got markets trading higher as we speak. NASDAQ 100 up by 526. S&P's up by 155. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the S&Ps right now. You're up by 167, and you see climbing up to that area that we got on the spike. Pretty remarkable. Tariffs aren't paused for 90 days, but we get the market action nonetheless. And yeah, as I was talking about, we have the VIX at about 40 right now. You are going to get some rip-roaring rallies, some rip-roaring declines. There's a lot of uncertainty still in this market right now. Okay, yes, we're 900 points. 903 points. Exactly as I speak. Off of the highs of the S&P, but you got to keep in mind a 382 bounce brings you almost 100 points above where we're at right now. We have a VIX at 40. The moves that you're talking about, when you put a VIX at 40 in terms of how far this market can move, we'll see. And yeah, interesting in terms of China. Now, you know, what I found myself thinking last night is, folks, China is ready to go to war for Taiwan. Okay, they're not going to cave China in particular, and this is the, you know, one of the risks. Okay, whether you think it's an outlier risk or not, is an escalation in a trade war. China says it's going to fight to the end. Well, what's going to happen, man? They're going to probably get an additional 50%. Maybe they'll talk. I don't know how that plays out, but I don't see China just saying, "Oops, sorry." Now, with that in mind, you get this. Trump had a great call with South Korea. Says China wants to make a deal. Everybody wants to make a deal. What does that mean? That means nothing right now. Okay, the market's looking for more clarity than that. Treasury Secretary, a member of the administration. China's playing a losing hand in escalating tariffs. Maybe they are. Other countries appear to be more willing to negotiate than China. If they come to the table with solid proposals, I think we can end up with some good deals. And part of the calculus of that may be that some part of the tariffs stay on. Now, Steve Moran, who is the chairman of the Economic Council of Advisors, And what I don't understand, he was on Bloomberg this morning, and I read about this yesterday before he was even on it. And he's on it. Seems like a bright guy. Went to Boston University, Harvard educated, BU, 2005, I think. I was looking up the gentleman. Good old Boston guy, it seems like. Nothing like the education built in Massachusetts, folks, and New England in general. Very fortunate growing around that area. So many great colleges, universities, let alone the high schools. And just education in period. But I digress. Now, he says a lot of things in here, okay? And I'm going to post this, and these are his remarks that he made to the Hudson Institute, okay? And what I found myself asking is, he lists 5 things that, what forms can that burden sharing take? He wants everybody to share the burden. Okay. Now, some of the verbiage in here, okay, is that he blames China, and he's talking about U.S. being the reserve asset. And one of the things he does is that he blames China for the 2008 crash, which was driven mostly by securitized mortgages that were worthless. And the way he shifts that blame is that he says, for example, in the years running up to the 2008 crash, China, along with many foreign financial institutions, increased their holding of U.S. mortgage debt. Okay? Who was selling China all that mortgage debt, right? Nonetheless, which helped fuel the housing bubble, forcing hundreds of billions of dollars of credit into the housing sector without regard as to what the investments made sense. Okay? China played a meaningful role, but what he says is that they end up right here. And I didn't read the beginning of the paragraph where I should have started, which is the kicker of this, okay? And I'm talking about this because in light of this, what's so tough right now, and you got to talk about the policy shaping the market when you're seeing, you can't just talk technicals. When you can, okay? I shouldn't say that you can't. You can. But you better believe there's a lot playing out. And you can definitely gain an advantage by looking at the policies. And it's a game theory perspective. It's a negotiation, okay? Here it goes. There are other unfortunate side effects of providing reserve assets. Others may buy our assets to manipulate their own currency to to keep their exports cheap. In doing so, they end up pumping so much money into the U.S. economy that it fuels vulnerabilities and crisis. If we're worried about too many people pushing money into the U.S. economy and blaming it on I don't compute, folks. It says enough, okay? And then, you go down to the 5 things that, what forms can that burden sharing take for other countries? Just write checks to our Treasury. When does that one go away? When does that one go away if it's just give us some money? You gotta just give us some money and things will work out. Number 5, just write me a check. I bring it up because you have to recognize, where does that end? Okay, where does the clarity come from that this market needs to trade to higher price? And I'm not sure I can figure it out in my own head as of yet. And please let me know. Now, you go from there, and then you go to China's response. And the tough part about this too, and I'm not going to go down the list of people that are coming out against it in Wall Street or whatever, okay? And if it's China one-off, that's one thing. But how does this play out in perpetuity? And I don't imagine that's going to de-escalate with China. And the market's always going to have an unclear notion on other countries as well. You're seeing it play out right now with Vietnam. 0% tariffs, but the devil's in the details. If you make a deal, what happens if that deal is not likable in 6 months, 12 months, 18, 24? Do you know how long it takes to build a factory? That's the tough part here. Okay, it's not harping on things, but that is one of the tough parts here. Now, what's interesting is you take a look at the Dow. Okay, in a similar area on the Dow. You're talking about a 382 that gets you right at about 40,000 in the Dow. And again, as I was talking about in the S&Ps, that area on the S&Ps at about 53.40 in terms of your 382 bounce from the larger move, and your area on the NASDAQ 100 brings you right into the 618 of the shorter term move. So that move at about 18,750. About 600 points above where we're at right now. But man, we got the market accelerating higher. NASDAQ 100, we're up by 3.3% as we come into the opening bell. S&Ps, you're up by 3.4%. The Dow up by 3.6%. And the Russell up by 3.2%. We got the gold contract right now up $58, back above 3,000. 3,031. Stay tuned, folks. We'll talk some more. We got equities. We'll take a look at some of the other market makers, market equities making moves this morning. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open, and you open at session pre-market highs. We're coming right into that area that we had the spike high yesterday. Pretty remarkable in light of that news not happening. A little bit of an escalation almost with China, and nonetheless, the market drifts higher. We're up by 3.5% in the NASDAQ 100, 3.5% right now in the S&Ps, and you have the Dow up by 3.5%. How about for that for some parity? And are we above there on the Dow? Yeah, we're above that price level in the Dow right now. NASDAQ 100, you're talking about a spike high that gets you all the way up to 18,361. Okay, 18,361, and the S&Ps bring you to a level just above where we're at as well. 52.86. We're trading at 52.70 right now. And again, those confluence areas, put them on your charts. All right, confluences are very strong. You're talking about confluence, folks. Our Fibonacci retracement areas from different trends, the 382, the 618, the NASDAQ 100, you're looking at about 18,750. On the S&Ps, that creates a zone from about 53.50 up to 54.10. And yeah, those are large ranges, those are large numbers, but that doesn't even get you back to the lows we had on March 13th. And the sell-off on Wednesday of last week began at 57.73. So yeah, that would bring you to the 618, the top of that area, 54.31. And all that would be is bouncing to the 618 of the run that began from Wednesday's announcement. All that would do is get you to the end of the day Thursday, too. Remember the carnage following Wednesday night? The 618 gets you to the end of the day Thursday almost exactly. So some nice technical areas setting up in this market. Now, we talked about equities, right? So, Apple shares up by 3.2% right now. Amazon up by a solid 4%. Look at that give back right now on the open on Amazon, though. Microsoft shares up by 3.2% right now. NVIDIA, there you go, up by 6.2% for NVIDIA. NVIDIA's up $20 from yesterday morning. And this thing has about 25 billion shares outstanding. So NVIDIA market cap up $500 billion from early trading yesterday. Remarkable. All right, let's go a little bigger picture on some of these equities, okay? Check out that bounce right from the 618. NVIDIA shares. And not to call it super conservative, but you're only taking the run that began at the beginning of 2024 for NVIDIA, when you can see that this went from $10 to $50. But if you just take the run that began here, okay, and that is, we chopped around for almost from July, when we originally hit almost $50, to where we were in January of 2024. So you're talking about almost 6 months. You consolidate, you break higher. NVIDIA pulls right back to the 618, okay, 87.15. Now you go even longer term picture than that. As I was talking about Microsoft shares. All right. These are nice critical areas. Whether you're talking about the highs of 2021 was 349 in Microsoft. We just traded down to 344. That also correlates to the area that you were in 2023. So Microsoft trades back to a nice 350 area, because you break below that area, maybe 311 would be the area that you're looking for, but we have a nice bounce going on Microsoft. Talked about Amazon. Again, yeah, we got quite a tail going on, but you bounced to this area that we chopped around on Amazon for a full year. From the highs of 2020 following COVID to when the pullback began towards the end of 2021 for Amazon shares. You jump over to Google. Again, look at these technical areas. This is why you can talk about both, folks. You can talk about the technicals. You can talk about the level of uncertainty that's difficult. It doesn't mean that we're going to accelerate back to highs, but yeah, that's a nice trade back against the wall. Pretty similar action, though. You trade below 150-ish on Google. Where's the line in the sand? You put the 618 of this entire move recently, maybe 132, but there's really not stopping a lot of these equities from going back and testing the lows you were at in 2023. Netflix is its own animal. I took a look at this one, but it's its own animal. If you're looking for Netflix, the 382 gets you back to about $721, and the $700 area is the highs of 2021. So, because even if you're not stepping in this market yet, and nothing against not stepping in, you do want to be looking for areas, if you're looking longer term, that you can start scaling in. You do. America's going to be fine, okay? And on a longer term basis, it will. But not with the level of uncertainty going on right now. What else do we got? We talked about Apple, Amazon, Google, Netflix, NVIDIA, Microsoft. Yeah, what's the wipeout on Apple going? Something like $500-600 billion in market cap. Remarkable. All right. Let's see what else we got going on. Yeah, there it was, $640 billion. Well, they're going to get a trade higher today, but yeah, $640 billion. And I imagine Apple's going to be one of the companies that's going to be okay. when you have the president touting, what is it, $500 billion they're investing or something like that, I think they'll be okay. They'll figure out a way. But how do they do that in light of China ratcheting up? And even if there's a solution tomorrow, what does that mean 30 days from now 60, 90? China is going to be one of the most difficult ones out there. And Apple's going to be at risk there. All right. Now, there's the chart I wanted to get to with Bitcoin and the Magnificent Seven. Look at that correlation, folks. Okay, that's the price performance since Trump took office. The Wall Street Journal, for some reason, what I try and say delicately, right, is like, how do you bring up something like this without somehow being called a hater and somehow hating on the index performance since Trump took office? Now, the tough part that they should rightfully put in here is that you really should have the market performance since the election took place, okay? That would be a fair critique of the data. But nonetheless, these are stark charts when you just look at it from January 20th. NASDAQ composite down 20+%. Now, what is remarkable here is, yes, yields have dropped a bit, okay, but you have the 10-year well above 4.2%, man. We're right back to where we were probably in March, and you're just off about 4.5. And realistically, that's one of the situations that is not fair to the move that you got prior to that. And then, Bitcoin trading exactly with the Mag 7. Global stocks, different story, down about 8%, but you traded higher on some of that premise going in anticipation of what was going to happen. Let's see what else we got. How about the Final Four last night? You got to talk about it, man. Florida, for what was labeled as a Final Four in terms of the whole tournament, not a lot of huge buzzer beaters like we're used to in the first round, right? No real Cinderellas going super far. The Final Four was 4 number 1 seeds. That hadn't happened in a while. Nonetheless, those Final Four games, unfortunately, I'm an old man. Couldn't stay up until the final of the game last night. But I was up early. That's what happens when you go to bed early. You wake up early, folks. And that's a beautiful thing, too. And so I was watching the final 2 minutes this morning, I found. I watched the end of the game, of course. Houston, always a tough one, man, for those kids. They had a 12-point lead in the second half, folks. I think they were up 42-30. 42-30 they were up, and they lose by a couple points. Don't get a shot off in the end. But yes, 3 spectacular comebacks and quite a Final Four, and congrats to Florida and congrats to Houston, man. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Jumping back to the markets right now, and we're just chopping around where we were. Markets holding on so well. So far, so well. As in NASDAQ 100, still up by more than 3%. We got a little bit of volatility right out of the gate, but yeah, 18,130 chopping right around. Interesting to see if we face any resistance as we are now at the level that you were trading at, basically, on that spike higher. And we're closing the gap from where you were from Friday to Monday as well. All right, we check back in on yields. All right, a little bit of a bounce. Yeah, this is going to be an important area. We've chopped around in this area many times. As I said, you even go back to a weekly basis in terms of the acceleration higher. We chop around. You put it back to a daily. Same chart. We chop around. We've backed off a bit. We're right at that critical line on the 10-year, and that correlates to about 103.50 in the dollar. We're at 103.19 right now on the dollar. You take a look at gold. So we bounce right at the 3,000 price point. You take a look at the volume on this gold contract right now. Volume drying up a bit the last 2 days, but I say drying up a bit, you dwarf anything else we've done. These 3 days on the downside, you're talking about, for the gold contract, 369,000 contracts, 309, and 303. How far back do I have to find anything above 300? We got 1 day in November. The election day. That's the last time you did over 300,000 contracts. So we have some real volume right now on this downtrend. We'll see if we can catch a bid. We'll see if we can do it with some volume. You compare it to the acceleration we had to 3,000 when you broke out this consolidation. That was a huge acceleration, and you did it on 236,000 contracts. Now, again, we're seeing a market meltdown. Volume numbers are going to be larger across the board, but price and volume matter. That doesn't distort the data. That just means that's where the price and the volume are meeting. And we have huge volume to the downside right now. 3,000 is going to be a critical area for obvious reasons. Price number, but also that's where we were in March. That's where you accelerated with some strength on the day of March 13th. And that's where we bounced a bit. We'll see if we can hold on that gold contract. Now, silver, different story, man. Yeah, if you're looking for action in metals and you're trying to decide between silver and gold, I would go with gold right now, folks. It is quite a decline on silver. Okay, we're trading at $30.31. Pretty remarkable that silver couldn't get above the highs of October, which was 35.07. You barely breach it, and then boom, the sell-off. You take a longer-term look at silver on a weekly basis. I had been highlighting this in the gold report. Look at this chop. Look at the declining volume, and then where do you get the acceleration? All to the downside. Yeah, and we're in Wednesday trading right now, beginning. You already have 166,000 contracts traded the last couple days. Yeah, you did 134 yesterday. Excuse me, it's Tuesday, not Wednesday. Time is flying. As in, you're going to get some decent volume on this bar as well. We'll see if that green can hold, though. But silver looks so weak. and you even take a look at some of the silver stocks, whether it's Hecla bumping up against the $5 area, which is the bottom of its consolidation it had been for almost the last year for Hecla. What's some of the other ones? First Majestic. Yeah, this one, right? 565. Just a tough look for a lot of these silver stocks right now, man. Look at that weekly chart on First Majestic, right? Now, let's take a look at copper. Yeah, copper looks to have topped. You like technical areas? Yeah. 520 was the high back in May of last year. You briefly get above there, and boom, the sell-off. What I will say is $4 support here is a nice area of support. You bounced a bit. You're at 425. But, boy, the copper stocks right now, whether it's Freeport-McMoRan, trading at 31.54. Okay, you're bouncing from yesterday, but look at that chart, right? From $55 down to $31, and last week you accelerated lower on volume. SCCO is another one. We had a volume spike. This is weekly. With the last two, decent volume on the downside, and just look at that chart from 129 to 80 in copper. So copper looks to be in trouble right now. The equities are saying. Silver, another tough one for those equities as well. You talk about uranium. Here's one I'll give you, okay? We're looking at. That might be a buy. This is a nice technical area. We'll see if the volume, okay? It's going to be important. We're looking for a bid. CCJ. Now, they're up by $3. They pull back from 62. Now, remember, they were getting a huge acceleration here on some of the news of uranium, Microsoft Steel, nuclear power, etc. You accelerate to $62. And that deal was with Constellation Energy, but in general, okay, CCJ, that's a nice buy potentially. At least you got your back against the wall. You set a stop. You're looking for some action in CCJ. We might bait there. I'm looking at it. I'm waiting to see how we do this week on the volume. Okay, Friday's volume, 9.4 million shares. Yesterday's bounce, 6.2 million shares. Today, we'll see how we play out. But you want to see a little bit more action than that before I step in the way of this train, because that is quite a downtrend from $62. But this $35 area, it's a nice area. We'll see how the volume plays out. All right, markets bouncing yet again. We're up by 620 points, 3.5%. Got a lot of, I'm going to take some of these off. Tell you what, I'll move that one, and I'll move that one. And yeah, that area for the confluence, about 18,750. Pretty remarkable. You're talking about 2,300 points off the lows that we had on Sunday night futures. We got action in this market. All right, let's jump around to some of the charts. Apple shares up 2.3% right now. Amazon up 3.1%. The one I didn't cover, that's right, Meta. Okay, we took a longer term look at the Mag 7. I don't think I pulled up Meta. And again, look at these technical areas. Okay, Meta. Now, last week, dramatic volume. 121 million shares, we'll call it, to the downside on Meta. We'll see how we bounce, but you're talking about coming into a nice critical area that we consolidated in basically the beginning of last year. This is a weekly, and that area is also the nice 382, and that's where you bounce. So you're bouncing at the 382 on Meta shares. And yeah, Netflix, different story. Look at Netflix up by 5% right now. Disney up by 3.8%. Let's check out the banks as we come into earnings season. Bank of America up by 3.6%. JP Morgan up by 5.3%. There you go. Look at this, up $11. Citi up by about 5% right now. Wells Fargo up by 4.5%. JetBlue shares? Oh, even JetBlue can't catch a bid. I should say JetBlue can't catch a bid even on today is the way to phrase that. Delta up by 1.7% right now. United up by 0.8. All right, airlines not catching the bid you may expect right now. And this is where, if you're looking for buys in this market, folks, look at the equities that are moving today, okay, and see where you want to position yourself. Because, boy, you look at those airlines, right? What's going on? Market's getting a huge relief rally, and you have equities that are barely positive. All right, we get the S&Ps up by 148, NASDAQ 100 up by 541. Stay tuned, folks. We'll come back. We'll talk some more equities that are moving. Don't go away.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the market pushing session highs right now. NASDAQ 100 up by 3.6%, 18,194. And again, keep it on your chart, man, because we are bumping up against this area. Pretty remarkable. If you told you yesterday, and that's where, folks, no matter what, upside, downside, always, a lot of trading, a lot in life, when you're talking business or anything, risk reward, okay? And never think that, especially in the market, that things that you think can't happen won't happen. If I had said to you yesterday, when the NASDAQ 100 was trading at 17,171, that the news was fake about the 90-day pause, I gave you the information about what we would get from China and a potential ratchet up, and I said to you, there's not going to be a much more discerning news event. And yeah, there's some news, there's some talk, there's negotiations, okay, but there's no main news story like we got yesterday driving the market higher. And I said to you, what is the probability that we're going to be above 18,219 by tomorrow morning? What would you put those probability odds on? Okay, 1,000 points higher in the NASDAQ 100, and there was no change in the news. But that's the volatility we're getting in both directions right now. So let's check out the VIX. 37.54, and that's a real spike. We see how quickly this can come back down. maybe the market's giving us a little bit of optimism. We're going to watch the volumes today, but boy, you get a powerhouse second day rally, you do it on some volume. And, one of the things that really hit me, folks, were the technical levels on the Mag 7 equities driving this market higher. Keep your eye on those, because that is the critical area. And these are the equities. You take a look at Amazon, back above that area. Amazon up by 3.6% right now. Apple up by 3.5%. Microsoft up by 3.2%. Google up by 2.5%. And we finish it with Meta shares up by almost 5%. All right, folks, thanks so much for kicking your Tuesday off right here at TFNN. Stay tuned. We got our man Basil Chapman coming up next. We'll see. Yesterday's hour during Basil? Yeah, how about 2,000 point moves? We'll see if it happens today. Stay tuned for Basil, folks. I'll see you tomorrow. Thanks so much. Have a great day, everybody. We'll see you tomorrow morning.